Hello, Maine residents. Welcome and thanks for joining me today. I want to talk to you about a mortgage program that helps self-employed individuals or 1099 employees in the state of Maine. And this is for whether you're purchasing or refinancing a home, and it could be a primary residence, second home, or even an investment property. It's the bank statement loan. Not all lenders in the state of Maine offer it. You'll find that your local bank likely does not offer it. And it's a unique, very special, and very important mortgage program for self-employed people. So what it is it enables you, instead of trying to qualify using your tax returns, because if you're self-employed, you might know that you write off a lot and have difficulty qualifying with your income that you could actually document on your returns because you might show a loss or a very low net income. This program allows you to qualify by just showing the flow of money that you have coming in to your bank statements. The bank statement loan uses anywhere from 12 to 24 months worth of your last, of your deposits. They don't look at the outgoing dollars, and they do not look at your balances. They just look at the average monthly deposits, and they take an average of those and a percentage of that average, let's say 50% of the average, and then that's the number they use on your loan application to help you to qualify. It is the premier mortgage program for self-employed people now, and we have the ability to help you with that in the state of Maine. So this would be for, again, primary residences, second homes. Maybe you have a camp or a lake house. One of the watch outs, though, is if you have too many acres, it limits our ability to help you. We can still do it, but our options are limited when you're on too many acres. When you're over 25 acres, 50 acres and more, it just becomes a little bit more difficult. It can be also done on mobile homes, manufactured mobile, manufactured modular. That's fine. Multifamily homes. I don't know how many of those exist in Maine, but beyond 2 units, but that's possible as well. So again, you got to provide your bank statements. That's the first thing you need to do to help qualify. Then you have your credit scores. And credit scores, you cannot go down to 500 credit score like you can with an FHA loan. The lowest I'd say you could go down to is maybe 550 to 580, but then with that, now your down payment is impacted, and down payment for this type of mortgage program is basically driven by your credit scores. So the best possible down payment you might find is 10% down with credit scores, say over 720 or 740. And then as your credit scores decline, the down payment is actually higher. And if you do get below 600, you're looking at 25, 30% down as a standard for this type of program. Now, we do have a very unique 3.5% down program that is, again, very unique. And it's a different type of mortgage program. It's not what you would normally expect. So you do have to give us a call so we can explain how it works to you and see if it's something that you might be interested in. Just follow the link down below to dreamhomefinancing.com, and I'll also put that in the first pinned comments. So that way you could find your way to us, regardless as to whether you want that option, so that way you can speak with someone to get pre-approved for a bank statement loan, get a quote, etc. Okay, so now you know about the down payments. The rates for a bank statement loan are always a little bit higher than conventional or FHA because of the risk involved. Now, the one good news is if you put less than 20% down on a bank statement loan, you're not paying PMI, mortgage insurance. So therefore, even though the rate might be higher, your payment gap would be closer, because if you put less down on a conventional or FHA loan, you're going to have the mortgage insurance, which is, depending on your loan amount, a couple $100 a month. So you may end up close to being in the same place there when it comes to rates. You can do this again with a purchase, a refi, a cash out refinance also. So you might want to refinance the property because you want to get a better rate, you want to lower your payment, you want to get out of a balloon mortgage that's coming due. You might want to refinance to be able to get someone else off of the mortgage. Maybe you've been divorced, you want to get your ex-spouse off there. That's also possible too, to do it with this program. But in cashing out, for whatever reason you want to cash out, that's another option. The ability to do that is also driven by your credit scores, and how much you'll be able to cash out is driven by your credit scores. You could expect the maximum cash out loan to value ratio to be anywhere from 70 to 75%, depending on when you're watching this video. So always check in with us to see what the newest guidelines are today. And there could be a HELOC or second mortgage option as well if that's what you're looking for. If you don't want to touch your first, contact us to be able to discuss that option as well. So I appreciate you watching. If this was helpful, please hit that like button for me. It definitely helps the channel to rank better so you can see more of our videos. And again, visit us at dreamhomefinancing.com. I hope you have a great day, everyone, and we'll see you in the next video.